Farham. In today's session, we are seeing that the Dow Jones Industrial Average is at important crossroad. So far in the session, it had shown a dip on the low side, but now it has recovered those earlier losses and again trying to cross and hold above the 11,500 level. So this is the interesting juncture from the near-term perspective, and we will see what are the implications moving forward. If we look at the data rocket for the day, I will not be going into the details of the earlier releases which happened during the European session. Now we focus on the North American trading session, and so far we got two important releases, and both these data points are pointing to the improving economic sentiments and the actual situation on the ground in US economy. If we look at the retail sales, both in terms of month on month as well as year on year, there is more than expected rise, and this is coming on back of the solid reading for the prior month also. So on that count, there is more of a sustenance of the positive economic development, and even if we consider the industrial production data, there also we are seeing less than expected decline in terms of year on year and in terms of month on month. The rise is there, though albeit at a slower pace compared to the prior month, but still good enough. So both these points are in conjunction. In conjunction, can be considered as a continuation of the momentum, and also these are going to cement market participants believe that US economy is now on a stronger footing, and in next couple of months or even next couple of quarters we will see robust turnaround happening, and the momentum is only likely to pick up and gather more pace moving forward. And in that context, the US Federal Reserve's meeting minutes, which are going to be released later in the day, become more important. Here, the main concern emerging because of this better than expected economic turnaround is inflation. So, what kind of commentary we get on the inflation? That will be the interesting point. If we recall Mr. Powell's statements a couple of weeks back, he had shrugged off the inflationary concern. So at that point in time, the things were not that good, at least were not looking that good for US economy. But now, in light of new economic developments, we will have to see if there is any reassessment coming in. Now moving on to the technical front, first I will see what's happening in the Dow Jones Industrial Average, and then we will also look at the turnaround story of the dollar index. Let's start with the Dow Jones Industrial Average technical outlook. This is the daily time frame chart, and here, after making the all-time high in the previous session, there has been some correction from the higher side. I think if we count from the top, it is closer to 1 percentage point. So this is not really a deep correction, and nothing much to worry about. This is normal and part of the market moves. And now, after coming closer to the 11,500, I think we will have to be cautious and adapt more of scalping strategy on this juncture rather than looking for the big trades. So this session is also geared up for those opportunities only. I'm not really talking about big moves here. So here you can see that we are seeing the Dow Jones Industrial Average consolidating closer to these prior consolidation phase levels and just above the 11,400, and this deep which we saw in the earlier hours, where we had sharp moves happening, and now the Dow Jones Industrial Average is again climbing back. So this shows the bias still remaining on the bullish side even from the immediate perspective, and I think as long as this level of the 31,500 holds, we can be looking for the buy rates even on these record highs, and of course the immediate target will work out closer to this yesterday's high, which is there closer to 31,700. And as I would like to remind again, this is the time to look for scalping opportunities where we will have to keep the stop losses and target prices fairly sharp and not really go for big trades. So if we want to look for the trade opportunities in today's session, I would say that if we get the breakout on the higher side, closer to these 31,550, we can look for the fresh buying opportunity while keeping the stop loss just closer to 31,450. So that's a stop loss of around 100 points, and with that risk, we can target almost 200 points on the higher side where we can look for retest of these prior swing high, so the target can be kept closer to 31,750. So this is going to give us the risk reward ratio of 1 is to 2. But if that doesn't really materialize and if we get the break out below these immediate swing lows, anywhere closer to this 31,450, then we will have to change our outlook and look for shorting opportunities where I expect the deep to get the Dollar Industrial average even closer to these prior swing lows of around 31,250. So here the opportunity is going to be there on the both sides and lot is going to be dependent on how the price action plays out. So we are more dependent on the price action rather than our inherent bias. So I would say that opportunity can come knocking on any side and we will have to be prepared for it. Now moving on to the dollar index. In dollar index, the underlying momentum is strongly on the bullish side, both from short as well as medium term perspective. And if we consider the Fibonacci ratio, we saw this reversal gaining pace after getting close to the 61.8% Fibonacci retracement of its rally, starting closer to 89 and going all the way towards 91. And starting from yesterday's session, the dollar is gathering strength against its most of the major peers, and that is being reflected in the dollar index chart as well. And now I think this is the time to look for buying opportunities only, and here we can taking some technical factors which are pointing to the further upside. If you consider the pivot point series, here you can see that this double bottom kind of formation took place closer to the central pivot point, which is there around 91 for this month. And from there onwards, it has been a sharp reversal where the dollar index is not really showing any signs of stopping now. And it will be bit difficult for us to look for the fresh entry points with the optimum risk reward ratio also. But still, I think we can wait it out, and if we are fortunate enough, we can indeed look forward for fresh trading opportunities even on these levels. If you consider the regression curve, it had started to move on the lower side, but now that price action is again trying to cross above this upper band, I think we will see flattening of this regression curve in next couple of sessions, and then it will be becoming more conducive for the long trades. And till then, we can rely on this lower time frame charting, where we have this 200 SMA level closer to 91.7 levels. Along with that, we also have the help of this prior swing high. So we have this important support level coming into play around 90.7, and for the time being the dollar index is trading around 91, so we are around 30 pips away from our desired entry point. But in the market we can't really say that we will be getting the ideal entry all the time. So what we can do is we can keep this level in mind, and as and when we see some sort of correction, at least some minor correction should be taking place, and then do consolidation, and after that only, I think we can be confident enough to jump in and go for a fresh trading opportunity as long as the dollar index is holding well above the immediate support level. And in due course of time, I'm expecting these SMAs, both 50 as well as 100 SMA, to catch up, and we might see these 50 SMA crossing about 200 SMA in tomorrow session, most probably, if the price action remains strongly on this bullish trajectory. So for immediate entries, we will have to see if there is some sort of correction, and as long as this support level is respected, we can be hopeful of the continuation of these bullish stance, where the target can be kept as per our minimum risk reward ratio. Suppose if we are taking a risk of around 20-25 pips, then of course we will have to look for the target price of at least 50 pips on the upside, and given the formation which we have observed in the dollar index, I think that shouldn't be a big ask. 50 pips can be reached or even more than that, and in due course of time I'm expecting the dollar index to even cross above the price swing high and get closer to the 92 levels in coming days. So that's it from my side for today's session. If you have any query or any idea to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risks associated with trading in the financial instrument, and one should be careful while using the information provided. Thank you all for joining in. Do subscribe to the Redivasco webinar channel to stay updated on the market developments. Have a fabulous day ahead. See you tomorrow. Goodbye.